Hello everybody and welcome to this week's Motor Trade Radio podcast, brought to you in association with eBay Motors Group. You're joined by myself, Philip Nothard, and Curtis Hutchinson. And today, this week, we've got a podcast special for you, as we're delighted to welcome back a friend of the podcast, Mark Lavery, CEO of Cambria Automobile. So welcome back, Mark, to the show.
Hi gents, how you keeping?
Very well, very well. And we'll find out shortly how well you're doing as well. But
exactly. No, it's great to have you back on, Mark. Thank you, Curtis. It's great to be back, and I hope that there is a little bit of interest in what we've done, and happy to share those experiences with your listeners.
Excellent. Now, Mark, you'll already be known to many of our listeners, but by way of a quick background, you started as a trainee service receptionist aged 19 at Skelmersdale Motors back in 1984. That was a Ford dealership just outside of Liverpool, then became a trainee salesman, progressed to sales controller and general sales manager in just 2 years. You then joined Octave Botner's AFG distribution and retail business. Now, that'll be a familiar name to many listeners of a certain age, but you actually joined as their youngest general manager, running a site in Rochdale, followed by other sites in the north. Following that, you joined Hartwell Group in 1994 as a floating general manager before running the group from 2001. In 2003, you joined Reg Vardy as ops manager and then founded Cambria Automobiles as a startup aggregator business in 2005. So first acquisition was Sudbury Group the following year. And in 2012, the expanded group listed on the London Stock Exchange's alternative investment market. And you continue to grow the group through acquisitions of underperforming businesses. Then, following an MBO, Cambria delisted in November last year. So the group today operates 27 sites, representing 44 franchises and 18 brands, including the likes of Ford, Vauxhall, Citroën, Jaguar, Land Rover, McLaren, Rolls-Royce and Ineos. And you operate across England, into Scotland. Brand names include Grange, Dees, Invector Motors, Doves and Motor Park. So I hope that snapshot does use some justice there, Mark.
Curtis, I feel old.
I think we all do with that one,
congratulate you on your thoroughness of research. If I didn't know better, I'd have said I'd written it myself. so yes, feeling old and crusty, but yes, that would surmise my career. Thank you.
That's some background, that, Mark, let me tell you.
That certainly is, yeah.
That took us all back in time, I think, that one, didn't it?
And it's probably a podcast for another day, but I'd like to know more about the Octave Botner time that you made at AFG.
Those stories are for keeping to yourself, probably, Mark, aren't they, with the old Botner days?
Listen, guys, what I'd say is I've been incredibly fortunate to work with some wonderful people. Sir Peter Vardy, for me, one of the best auto retailers that Western Europe's seen. Octave Botner, one of the greatest distributors, and again, sellers of the brilliant brand of Nissan. The Jamil family with Hartwell, and of course they're the sole importers and distributors of Toyota and Lexus product in Saudi Arabia. I mean, you do sometimes look back and think how fortunate I've been to work with some of those world-class operators and managed to gain some of their knowledge and insight into our industry. So, yeah, it's been a fun journey so far. But frankly, just getting started. We're ready for chapter 2 at Cambria, and we're excited about it. So, yeah, we're okay.
Yeah, those are names that stand the test of time, don't they, in the industry, as we well know, and probably refer back to them consistently across the sector, as Cambria will be as well. So, it's great to have you on. Yeah, and I mean, let's start off with the MBO and the delisting. You know, we know that this was a process that kept you busy for much of 2021 of last year, and you and I have talked many times about it. But for the listeners, what prompted the move to private ownership, and how did that process start? More importantly, as well.
I think it was sort of a crystallising set of events, Philip, in as much as we listed at 50p. We spent 10 years with lots of different shareholders, with lots of different views, what we should do, what we shouldn't do, how we should do this, how we should do that. And in a lot of cases, not a whole amount of interest in the people who work in the business with us, the people who transact with us, the brands that we're fortunate enough to represent. And they were more focused on how much they could take out of the business. Our view is it's about our associates, it's about our guests, it's about our brands. And actually, the fourth part is our stakeholders. And when the stakeholders are sort of directing strategy and not in the best interest, in our opinion, of the associate, the guest, and the brand, then you sort of take a view after 10 years and think, well, we listed at 50. Over the 10 years, we've averaged about 48. And then I'll be candid with you, in the pandemic, April 2020, and we dropped down to 33p. And we just thought, listen, after 10 years, nearly 11 years of this, we've done everything we can to explain to people the value we think we're creating. And let's be clear, Curtis, Philip, this isn't just a Cambria issue. I think Constellation have done a really smart acquisition with a brilliant business that Dash grew from nothing to being one of the biggest businesses in the UK. I think that's a double smart investment from Constellation. The investment community just doesn't value motor retail in the UK at the levels that we think are in there. So we took the decision that we can either stick or twist here, and we took the decision because the value wasn't reflected in the share price. Well, we're better just doing it for the benefit of the people, i.e. all of our associates, who are creating the value. Now, you know, whether it's the right move or the wrong move, that'll be seen over the next 5 to 10 years. But certainly we've got a load more flexibility, a load more control. We can look after our brands better, look after our guests better, look after our associates better, realise our potential, and sort of we're 1 year into the next 10-year journey. And a lot happier for it. Our people are a lot happier. Our guests are miles happier, and our brands have been incredibly supportive. So we think it's a win-win all round. And you know, 2 or 3 of the people who were investors in the public company have come with us into the private company, which we're delighted with, and hopefully demonstrates that our offer was as flexible as possible, and that they can enjoy the benefits of it being run the way that we want to run it, rather than a number of other people wanted to run it.
Now, it's interesting, Mark, that you describe it as a sort of 10-year journey, being a listed company. Was there a time when being listed worked well for the group, or was the deal breaker very much the underperformance of the share price you've talked about, or was it just being too restrictive being part of a PLC?
Do you know what? Really good question, Curtis. Promethean Investments was the private equity house that we worked with initially. Okay, so by way of background, one of the shareholders in Promethean brought in an activist investor to try and get hold of the fund. Now, at that point, Promethean had 50% stake in our business, and the management had a 50% stake. So they came to us and said, listen, you've got a choice here. There is a chance we could lose, and if we lose, you'll have to sell the business, or together we can list the business. So for us at that time, we were still very immature, Curtis. We were still, tiny little business taking baby steps. And to trade sale at that point made no sense. So the alternative was to list. So did it work at that point for us? Yes, it did. Over the 10 years, the share price has been well, candidly irritating,
Yeah.
disappointing, frustrating with the amount of work you put in. And then you get to a point where you say, listen, in our opinion, and let's be clear, the vast majority of the shareholders' opinion, it doesn't make any sense to be public anymore. So that's when we pressed the button and executed on it.
And I mean, just jumping in there a little bit, but is it you end up spending more time trying to focus on the share price than actually what you're doing from as a business perspective? Because you end up spending your time to satisfy the city and the share price rather than satisfying the business and what it needs to do.
Yes. Really, and dead short answer, Phil. You just spent too much time. I mean, look at the recent circumstances at Pendragon. How much of Bill's time is being distracted away from running the business? It just takes disproportionate time and effort, and if there's no reward for it, you question why you're doing it. And so, from our point of view now, you'll see we've reconstituted the board. So the ops board has become the main board. The main board of the PLC has all stepped down. A couple of them have carried on into private ownership. But our main board of Cambria Automobiles now is the people who were on the ops board before, and they're the people and the associates that know how the business runs. You know, we don't need to point to people who have no understanding of the trade coming into the trade with enormous financial backing on the base that the trade does a poor job looking after its customers, and that the trade is ancient and the trade is sort of dinosaurs just waiting to be picked off. And you know, listen, I think as you've seen with Carvana in the US and Mr. Garcia, who was 24 months ago the alpha predator in auto retail, he's somewhat less of the alpha predator now. And look at Mr. Chesterman and Kazoo, and you know, that's been going on for the last 20 years. Tesco have had a go. The banks have had a go. Richard Branson's had a go. All people who don't understand the industry and don't understand not only how it works, but the value it creates. And that's sort of where we decided it. We you know, left to our own devices, we hope we're going to demonstrate that we can do it better.
Yeah, and you know, I think you've kind of summed some of that up in terms of, you know, the changes that the delisting and the MBO has given you over is it probably about 10 months now, isn't it? That, you know, and fundamentally taking this right down to, you know, you're touching on it there, but taking it right down to the day-to-day running of the business, you know, how has that now changed? I mean, you talked about obviously the structure of the management team. We know that you've diversifying the business with the things like SOGO in terms of that subscription element and things like this. You know, how is this now starting to change? Because you were probably holding back on some of your fundamental strategic changes until you were
Yeah.
probably delisted, weren't you?
I think that's absolutely fair, Philip. And to all intents and purposes, Cambria Automobiles, yes, I'm involved, but day to day, Tim Duckers is the managing director. Brian Murray's the chief operating officer. Simon Wells is the finance director. David Peake is the group after sales director, and Natalie Boone is the HR director. They run Cambria Automobiles. I'm spending more of my time, in fact, the vast majority of my time, on the diversification and startups of SOGO, of the property business, and we'll be rebranding motor parks in due course, and down the used car supermarket route, which we think we've got a slightly different angle on that we think could work quite well. So Cambria, to all intents and purposes, Cambria Automobiles is run by a new team of people who are the main board of that business and running it the way that they want to, with some input from the holding company at the top. But it's Tim and his team who are running Cambria, and frankly they've transformed the business in the last 12 months. It's a very different company now.
And Mark, looking at the business that you're describing, how has it performed over the course of the last 10 months under private ownership. And I'm kind of wondering how big an asset it is for you to have a number of prestige and luxury brands in the portfolio, which might not be as exposed to the cost of living crisis as some of the volume brands.
Well, how has it performed? We're 3 weeks off the end of our financial year, Curtis, and like everybody else in the retail side of the industry, we're having a good time. It's not really about this year for us, Curtis. It's over the next 5 to 10 years and long-term value creation. So I think Tim's put himself a really strong team around him with a really good vision of getting younger people into the business earlier, getting them out of school, training them our way. Our Excellence Centre hopefully will be supported by Ofsted and regulated accordingly to get more of the young talent in earlier and help them grow and help them push on. The structure of Cambria you saw over the last 5 to 6 years, we took a strategic decision to move away from a lot of the volume businesses that, frankly, the returns were suboptimal and move towards a high luxury segment. And I have to tell you that that has paid enormous dividends. And as we move forward, those businesses, sort of the most recent acquisition would be Edinburgh, which is Aston Martin and Rolls-Royce. And that location out of our 27 locations will be our, don't nail me on this exactly, but about the 5th or 6th most profitable location we've got. Now, that business went bust before we bought it, and now it's an absolute powerhouse. We've had to expand, build a new after-sales facility. We've taken the Ineos brand. We're relocating Aston Martin. Really excited about the new corporate ID for Rolls-Royce, which looks absolutely stunning, by the way. And, Scotland is going to go from strength to strength. That's the most recent acquisition. So your Lamborghinis, your Bentleys, your McLarens, your Aston Martins, again, they were pretty much all distressed purchases. And now they are the absolute powerhouse for the group. And probably if you looked at our HLS division, HLS and premium are 95% of our profit. So as we go forward, it gives us some confidence, Curtis, that we did the right thing over the last 5 years.
And I recall from our conversations over recent years, when we've been talking about your year ends, about the importance of this move to high luxury and just bringing it right up to date, because we're about to go into another plate change month. How do you think Cambria is positioned as a group that has moved into the high luxury end of the market? How do you feel about how exposed, or how it limits your exposure to what's going on in the wider economy?
Well, be clear, Curtis. It's not actually about the economy in the sort of 200,000 plus sticker price.
Yeah.
It's about the next new model. I was at the Bentley conference a couple of months ago, and if you saw their product line that they have coming, it is absolutely incredible. Now, you've also seen their half year, which is the best numbers they've ever produced, better than their full year last year, which was the best result they've ever produced. And I don't think I'm allowed to talk about what their target is in return on sales terms, but it's well into double figures. And I'm sure they'll actually do, well, they just do an amazing job. Now, Bentley are clear, they're not going down the agency route. They want dealers, because in that space, it's not a logical purchase. It's an emotional purchase. And your facilities have to be world class. Your people have to be world class. And to all intents and purposes, Curtis, we're offering a concierge service at that point. Not only do we have to know what our product is, we have to know every other product in the space, because people don't just click online and spend 400k on a Cullinan. They might do a little bit of work online, but then they want the full experience. And I think in the HLS space, I don't see that changing anytime soon, because it's all about good customer stroke guest outcomes. And I think when you look at the product line coming from Aston Martin in 2023, having a tough time right now, but once a new product starts to come through, spectacular. Lamborghini, we're 2 years out on everything. McLaren with the new Artura on the way, we're excited about that. Rolls-Royce, we haven't got a car. I think we've got 4 cars available next year. This year's already done. So we sort of look in that space, and we're pretty excited about the future, and we want to grow in that space as well, Curtis. That's important. We've not gone private to get smaller.
Yeah.
We've gone private to diversify and grow, and I mean grow substantially.
Yeah.
And following on from that, Mark, in that space, I mentioned at the beginning that you represent INEOS. How's that working for the business?
Do you know what is fascinating? And I guess that brings us round to sort of the elephant in the room for most of the industry and agency. In INEOS's case, it actually works really well. Now, I'm curious to see. It's critical we get the right customer outcomes. The order banks for Scotland are frankly absurd, and the order banks for the Midlands are coming in really close behind. The standards are minimal. The capital investment is minimal. The products are exceptional and offer great value for money as well. And we're looking forward to the first vehicles coming through. It'll be obviously our next financial year, so September onwards. But excited about that with the flexibility they've given us. But of course, they've got no legacy, Curtis. So it's sort of a blank piece of paper. It's probably the closest thing out there to Tesla. And of course, all the OEMs want to be Elon, don't they? And at $1 trillion valuation, I wouldn't mind being Elon too, by the way.
Although he's selling some of his shares off at the minute with everything else that's going on.
You'd also have to start tweeting, Mark.
Yeah.
Listen, I wouldn't mind one or two of the things that Elon has to put up with.
Be careful what you wish for sometimes in that world.
Yeah, I get that too. Listen, I think he's a genius. I think he's by far the best salesman on the planet. Doesn't matter what the product is. Boy, oh boy, can he sell it. And I think he is one of the big conduits for change within the industry. And I think it'll, INEOS is the closest thing out there to Tesla, what they're doing and the space they're occupying. So, our relationship with them is incredibly strong. And we're sort of excited about the future with them, and 2 great territories with the whole of Scotland and the Midlands as well.
Yeah. And just before we go into delve into the world of agency, because it's it's kind of we can't have a conversation without digging around in that world of agency. We've sort of touched on a couple of times. Just before we move on to that, we talked about SOGO and the world of that mobility, that subscription service, which is growing from strength to strength, from what I can see with what's happening in that space with Carl Hawkins, isn't it? I think that Hawkins that drives that. But obviously, you've mentioned we've seen this world of the plans of developing RAMP, which is a repair and maintenance business, and obviously your property portfolio, because we know that pre-delisting, sometimes the business was viewed more about the property than the actual business that it was. What's happening in them 2 sort of areas for Cambria before we sort of see your views on the agency model, Mark?
Okay, well, I think a couple of things, Philip. First off, repair and maintenance plans is now a sort of, it's a young company. It's its 5th trading year this year. I think they've got an exceptional product suite. Richard Hubbard, whose background is ancillary products for vehicles, is the founder of the business, and it's just gathering more and more momentum. And I think as we move towards, whether SOGO's subscription, lease, mobility as a service, lots of people have got a debate about that. But that's the area, SOGO is where the majority of our capital is going to grow that fleet. And that's going to get bigger and bigger and bigger and bigger, and particularly in the business space, because all of the senior directors, as you know, we all need an environmental, social, and governance strategy, and we've all got to get to zero emissions. There's no debate about that, and of course, SOGO can do that, notwithstanding the, should we say, inconsistency of government policy and infrastructure. We can offset any emissions using the BP target neutral scheme if they just can't adopt a BEV today. So SOGO's going from strength to strength, as you said. RAMP's maturing fine, really comfortable with what we're doing there. We can do better, as we can do with all our businesses. And actually, it's funny when you say a lot of people have viewed the group as it's more a property company than a car company. We've never really viewed it like that. We think we're in the motor trade and all aspects of it, whether it's selling them, leasing them, fixing the bits that fall off them, repairing them, maintaining them. Yeah. That's what we do. Yeah. One of your key areas of cost you need to be able to control is property occupancy. And if you own it, you can control it. If you don't own it, and you consider a bunch of the leases out there, in certain cases are RPI linked, in a lot of cases institutionally RPI linked, Philip, at the rent reviews, those businesses are going to get absolutely slaughtered. Mm. Now, we have very few leases left, so we're in a position that we're sort of pretty comfortable where we are, and it for the brands as well, it gives them continuity. Yeah, and I think that's really important. So, so most aspects we're comfortable where we are, comfortable where we're going, and excited what Motorparts can achieve as a standalone. And that's not a new launch, Philip. That's sort of a 15-year established.
I was going to say, it's not new, is it? Yeah,
that's where we started out 16 years ago now. Yeah. I think a rebrand, a refresh, a different approach to market, and we think there's quite a lot we can do there. And of course, vehicles coming off SOGO, they need somewhere to be retailed, don't they? So we think Motorparts could connect with that quite well.
Yeah, and I think that point of the property, I think, as you say, sometimes people look at motor retail, that asset ownership, it's that the balance sheet asset control and that kind of thing. But really, you're a motor retailer, and you have to be able to be diverse in what you do, be able to react to the changing markets. And as you say, as a listed company, sometimes you don't have that flexibility, do you? Right back to what we talked about at the start of the show. So, yeah, it's quite an interesting one, that one.
Yeah.
Right, Mark, I've got an exam question for you. You ready for this? Right, the agency model is coming and will fundamentally change the makeup of the franchise sector. Discuss. I mean, I guess what I'm interested in, Mark, is what's your view as someone who's running a franchise group? Do you see it as a good or bad thing?
Listen, I think it's what I'd describe it as is neither good nor bad, but curious. The thing that we can't take our eye off under any circumstances, and I think there's a danger one or two people may have done, legally, we have to provide a good customer outcome, as you'll have seen from the recent update from the FCA. Yeah. The franchise dealer network produces an incredibly competitive environment for a customer, guest, consumer, let's call them customers because most of your listeners will, need a good outcome and need a competitive outcome. Now, I've read the McKinsey report, same way you have. I've watched all the anecdotal evidence, what's happening in Australia, what could potentially be happening in the US, what's happening on mainland Europe. Is there good customer outcomes? Listen, it's sort of open to debate at this point, isn't it? If I walked into a facility and I wanted to buy something. Now, as you know, I'm sort of a little bit old and doddery now, and I was told you can, but you have to go home and do it on the internet. I've got to be honest, I'll just walk to the next facility where I can buy it,
Yeah.
and I'll purchase it. You know, we've seen Mr. Chesterman, who wants to do everything online, which, listen, you know, fair play to him. If that's what you want to do, Alex, good luck. But boy, oh boy, how's your capital deployment done, and what have you done for your shareholders? So in agency terms, is everything going to be transacted online? In a number of cases, yes. In a number of cases, no. I don't actually think, I've not seen one yet, a pure agency agreement. But the key underpin for me, Curtis, is, does it have a good customer outcome? And if it doesn't, the legislators will pay attention, the customers will walk with their feet, because I don't think agency is going across the whole industry. I think there's been a degree of herd instinct to follow. What that'll look like, listen, that's purely speculation. From our point of view, we will embrace it. Of course we will, if it makes economic sense. If it doesn't, we'll do something else.
Yeah,
And as we were saying earlier, you represent at the moment 18 brands. Do you expect to embrace it across many of those brands? I mean, you did say earlier that with some of the top end brands, they're not talking about agency at all. But of the others, yeah, what sort of mix do you think you'll have?
I think you'll see us move more towards a high luxury space, and I think you'll see some of the volume operations we run today not run in the future.
yeah,
And we've been upfront about that, Curtis, as well. You know, with the
Yeah.
people that listen, we've all got a choice. You want to work with some people, you don't want to work with other people. It makes economic sense in certain cases. It doesn't make economic sense in other cases. You know, for us, INEOS agency, I'm sure will work really, really well. In other cases, do I think agency will work well? No. So we've chosen to do different things in different businesses.
yeah. No, I think that's, to the point. Again, with the MBO and the delisting, it gives you those options, doesn't it? Stronger options, because you're making those decisions as a management team, aren't you? You as an exec team, you can make those decisions, and you're not reliant on shareholder involvement and opinion, really, to a certain extent, and a top public shareholder opinion on it.
I think, Philip, you've hit the nail smack on the head. I predict as part of agency, there'll be 2-year termination letters bouncing around everywhere reasonably quickly, with the standard 3 letters of yes, you're here, yes, you are if you do this, and no, you're not. And listen, we're okay with that. You know, everybody's got to run their business that makes economic sense for both parties.
Yeah.
And if it doesn't make economic sense, just do something else.
Yeah.
No, it's nothing personal, but you know, in certain cases, you can see you can see some challenges that, frankly, other people may be better qualified to handle than we are.
I mean, you're right. I think there's still a long way to go. And you talk about the blueprints. I think, the FCA and the CMA are talking about that there's no clear blueprints yet of a pure agency model that they may have seen. I think there's been reports and studies coming out on that. There's still a long way to go. But I think, we talk about the US and the power of the dealer network in the US market, but actually, the power of the dealer network in the UK market is as strong, and in terms of being able to stand up to this, and whether it's around the block exemption, the FCA regulations, and things like this, there's a lot to get through with this, isn't there, that is not very clear at the minute as to the outcome of it all.
And I think that's why my original answer to Curtis, Phil, of good or bad, it's neither. It's curious and it's interesting. I think the North American dealers have a different legislatory position that makes them an awful lot stronger than UK dealers and European dealers. And listen, I don't think it's something that you need to stand up to. It's really quite simple. If it doesn't make economic sense and you don't want to do it,
Don't do it.
don't do it.
Yeah, exactly. Yeah.
You know, I'm not a brain surgeon. I'm far from it. But if it doesn't make economic sense, they'll find somebody else to do it. Any given OEM will find somebody else to do a different thing.
Yeah.
And I think it's interesting that some are going that way, and particularly with, I think Chinese manufactured vehicles are going to have a profound impact on the UK,
Yeah.
and they'll all need representation networks, and they'll all need to go to market. So I hope none of your listeners do anything where they think, well, listen, I don't really want to do it, but I've got to. We think there's a load of opportunity, particularly in a turbulent, uncertain, and frankly dangerous world that we're occupying today. So, I think we've all got options, we've all got choices, and work with people you want to work with, and don't work with people you don't want to work with.
Yeah. And you make a good point. I mean, it's got to be financially viable. It's got to be financially viable for you if you're going into the route of an agent, but it's actually got to be financially viable for the OEM. Because if it doesn't work
Correct.
for either party, then why is it being done in that? And so there's a lot to play out, and as we've moved on significantly from what the early conversations around agency probably 2, 3, 4 years ago, that actually there is a partnership with this between the OEM and the dealer. And if it
Correct.
doesn't work for both parties, it won't work. So there's all that to play out. And it's just business at the end of the day, isn't it? So it's got to happen.
Key thing here, Philip, sorry to interrupt. Key thing here is a good customer outcome. If agency demonstrates it's not a good customer outcome, it ain't going to be around long.
No, exactly. I mean, we couldn't have you on the show. Moving on to sort of today and what's happening in today's market, and we couldn't talk about, we know there's all this what's coming around the corner, but, without asking you about current trade, and especially we talked previously around the chip shortage and that sort of material shortages and the new vehicle supply shortages, and we now move into a market where that used vehicle market remains to be constrained with the consequences of the new. How are you doing at the minute? What's your view in terms of that sort of short to medium term for the sector? How are you tackling these headwinds that we're facing?
Listen, I think we're a leaner organisation because we took some decisions when COVID arrived, and we made ourselves substantially leaner. By making ourselves leaner, i.e. fewer associates in the business, what it's actually done for us is something we refer to internally as red print, which is basically it's forced to a degree, cajoled and trained in other degrees, and really embraced in the majority of degrees, customer service. Where before we had lots and lots of people, frankly, what happened is a customer would make contact, guest as we would refer to them, but customer for this context, would make contact, can such and such a body call me back? And then they didn't. And then it went to somebody else and they didn't. Then we were meant to provide that and we didn't. And nobody accepted responsibility. We took the decision by being leaner, being more flexible, being more agile, we could deliver a better customer outcome, and a substantial part of our associate remuneration is based on how we look after the customer for the OEM. Now, if we're top quartile, everybody in our business earns more money. In top quartile, I mean in league table terms. If we're second quartile, everybody still does well. If we're third quartile, it hurts you financially. And if it's fourth quartile, you can't earn a penny a bonus and you won't be working with us too much longer. So in answer to your question, short term, still significant supply restraints. We all know that. Still a stable used car market because of the previous stuff that you mentioned. Is it tougher than it was 3-4 months ago? Yes. Is there less demand than there was 3 and 4 months ago? Absolutely. Is it going to get tougher going forward? Listen, you just need to listen to Mr. Bailey and the Bank of England, and we're all going to hell in a hind cart, aren't we? And, our view is by being leaner, being more focused on the guest outcome, customer outcome, and a world-class customer experience. If we're looking after our customers well, it doesn't matter what's happening in the economy. You'll still be okay. If you don't look after your customers well and it's a poor customer outcome, I think you'll find it more tricky going forward.
Yeah, there's a lot of customers or guests out there, isn't there, to go at. So it's just about maintaining.
So we've got to take them. We've got a database of 390,000 people after the last cleanse who have either transacted with us, made contact with us, or used one of our services. If we don't spend another penny on advertising and our people are proactive and we've got relationships with these guests, and because of our omni-channel systems, we can see where they've come from, how it's worked, where they've connected with us, what they've said to us, we'll still be providing transport solutions in some way, shape, or form.
Yeah, and that's back to your whole point of the diversification of your business into where you've been able to sort of take your business in different directions. That gives you those options of commercial opportunities with the 390,000 people that you've got on your system.
Correct, and I think, Phil, if you look globally, if you look at the market cap of Volkswagen AG, who are one of the best manufacturers in the world, does it represent the worth of that business? No, nothing like. Hence, there's a strong chats about Porsche being listed in its own right. How much is Porsche worth? How many billions and billions of dollars is Porsche worth? It's probably worth more than the market cap of Volkswagen. Now, does that mean Volkswagen, Audi, Lamborghini, Bentley, Bugatti, Skoda, Seat, does that mean they're all worthless?
Yeah.
Of course it doesn't. Of course it doesn't. It's just a volatile set of circumstances we find ourselves in. But for us, and it's been to a degree when we were public, but a lot more so now we're private, it's all about the customer outcome. That's what we're about. And if we do that on a world-class basis, we'll grow substantially, and that's what we want to do.
Okay, final question for you, Mark. What's your ideal scenario for Cambria by the end of the decade and beyond?
And that's assuming you've thought past the end of the month, or even the week, or even the year.
That's lunchtime today.
That's lunchtime today.
Yeah. We're working to a 10-year plan, Curtis, that we believe we can generate substantial value. We believe that SOGO will be the preeminent provider of mobility as a service in the United Kingdom and potentially broader than that. We think our property business will allow us to develop some existing motor sites and do different things with them that are actually far more lucrative, but they'll still be under our ownership. And that might be residential, it might be commercial, it might be a combination of the two, it might be retail sheds, and. We think motor parts can play a key part supporting SOGO, and when a vehicle comes off, they can remarket it. If we add the RAMP products to the used vehicles that we sell with the warranty for life on them, and ideally take a consumer on that drive to zero, that we change the vehicle every 2 years for more modern technology with lower emissions and so on, and all of those things connected together, it's sort of a circular argument with, is there space for maybe an insurance company in the group on top of motor parts, on top of Cambria Automobiles, on top of SOGO, on top of RAMP? We think so. So it's thinking away from being your traditional franchise dealer, and just thinking more broadly as a transport provider and a customer service provider. And if we provide a world-class guest experience and a good transport solution, I'd expect us to be substantially bigger over the next 5 years, which we refer to as Chapter 2, and next 10 years, which is Chapter 3. So we're sort of, genuinely, it sounds bizarre after 15, 16 years, I think we're just getting started. I think you'll see us bigger. You'll see us doing different things in different spaces, all transport related and all customer service related. And I think if we've got delighted associates and delighted guests and delighted brands, then the stakeholders will be delighted as well. That hasn't changed for 16 years, guys, and we don't see it changing going forward. Notwithstanding, we certainly need to go faster. We certainly need to diversify to grow. And if we do those things and we're exceptional in the spaces we occupy, I think we'll look like a very different business.
I mean, for me, the fact that your point in that is, and the whole interview and chat has been absolutely fascinating, Mark. That whatever you do, it's about your customer, your guests' experience, and providing that transportation need, whatever that is, for the future.
Correct.
Not just motor retail, whether that's through mobility, through SOGO, or the services that RAMP offer, or whatever that is. You're providing that service, aren't you? And as you say, you're providing it at that high level. So whether that's your Lamborghini in your high luxury sector, with that experience that they do want, and you made a point very early on in this chat that you pay that money because you want the experience.
Correct.
It's the experience element that comes with. It's not price driven; it's experience driven. So fascinating, and I Curtis will feel the same. I'm keen to sort of watch this fold out, and it's interesting where you made the point that actually it's like starting again.
Yep.
You're rewriting the Cambria book, aren't you, to a certain extent?
Listen, Cambria's Cambria. Cambria Automobiles will do what Cambria Automobiles does. We've just got to do it a whole heap better. And Tim Duckers has built an exceptional team. Let's also be clear, we've lost some really good people as well since we've gone private. So James Mullins did a great job for us for over 14 years. He's now CEO of Cinch. What a great position for him. And he's a car guy. He understands it. So you can see Cinch coming through. Chris Roberts has gone off to set up his own consultancy. Ian Godbold's gone off to set up his own consultancy with our blessing, and delighted for them. So we know that not everybody wants to be on our journey. The rest of the team are absolutely pumped about a great transport solution, a great mobility solution, whether it be a purchase, a lease, a subscription, making sure that the vehicle's on the road quickly so you're never further away than 15 minutes from one of our service providers. Now, we can only achieve all this, Phil, if we've got delighted associates. And we've just done an associate survey, and the feedback has been, really humbling. And that's where it all starts for us. It starts with the associate. And if the associate's world-class and delighted, the guest will get a great outcome. Without delighted associates, you won't get a great guest outcome. And that they've got to be the two things that drive our industry. Everything else, frankly, is superfluous.
Well, I can't say any more than that.
That's
a way to finish the show, that one, Mark. That's definitely.
Phil's speechless. Well done, Mark.
Summed everything up in one.
Good stuff, guys.
Yeah, Mark, look, many thanks for joining us today, and for spending quite a bit of time with us, and for going into some detail as to what, as you say, chapters 2 and 3 are looking like. So we really, really do appreciate that. So many thanks for joining us.
Curtis, it's always a pleasure to talk to you and Philip, and I hope it's not bored too many of your listeners too much. And
never.
I'll know if you invite me on again that maybe you didn't fall asleep on this podcast.
Yeah, definitely. So many thanks for joining us today. That's all for now. You've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Thanks for joining us for all the chatter that matters. We're back again next weekend. Until then, it's goodbye from me.
And it's goodbye from him.